But let's go to the 2 and 2 right now. Two stocks that Emily's watching, two stocks that I'm watching. Want to start with Boeing. Now, in the beginning of the trading session, shares had been trading higher for Boeing, but that was at the start of the trading session after they reported earnings. And you should know that their revenue was not what the street wanted. It was off. It fell to 14.8 billion in the fourth quarter. That was down from the 15.3 billion a year earlier. But if you go back before the 737 MAX had been grounded, healthy revenue was 28 billion. So they've got a long way to go. There are some things on the horizon, though, that are looking pretty good. They announced a trio of orders covering 23 wide-body freighters, also orders for 50 737 MAX jets with options for 50 more. But Boeing has a long way to go, especially to catch up with rival Airbus. Then let's look at Netflix. What a difference Bill Ackman makes. Shares plunged, remember, 20% after the earnings report, which disappointed on the slowdown of subscriber growth. But Ackman revealed to us in a tweet yesterday that Pershing Square has purchased more than 3.1 million shares of Netflix. Here's the quote from Ackman. "I have long admired Reed Hastings and the remarkable company he and his team have built. We are delighted that the market has presented us with this opportunity." I just got to tell you, folks, Ozark this season, it is dark. It's good, but it's dark. Emily?
Adam, let's shift gears here and talk now about shares of Levi Strauss. Now, those shares are jumping by nearly 9%, and at session highs, they were tracking toward their best day since April 2020 after the company posted fourth quarter sales and profits yesterday afternoon that both topped estimates. Now, even more encouraging was Levi Strauss's outlook for the full year, which suggested that demand was still strong for its denim wear and apparel, and that the company was still maintaining solid profits despite ongoing supply chain challenges. Now, the company sees 2022 revenue growing as much as 13% this year, and adjusted earnings per share are expected to come in between $1.50 and $1.56, or better than Wall Street's consensus estimate at $1.52. Now, Morgan Stanley analysts called the results, quote, encouraging for the holiday quarter, and also highlighted that they were better than Levi Strauss's apparel competitors, which indicates that momentum may have extended for this company into the beginning of 2022. Then there are shares of McDonald's. Now, this was another earnings story here. The stock fluctuating between small gains and losses throughout the course of today's session as investors also take in that report from this morning for McDonald's. Now, for the company, fourth quarter profits came under pressure and missed estimates due to staffing shortages, supply chain disruptions, and virus-related restrictions in major markets, including China and key parts of Europe. Now, McDonald's adjusted earnings of $2.23 per share were below the $2.34 consensus estimate. Now, McDonald's CEO Chris Kempczinski also said that he expects U.S. wage pressure to rise further this year in another weight on margins as we head into fiscal 2022. And these cost concerns more than offset McDonald's otherwise solid top-line results for the quarter. And we did see that comparable same-store sales were up 12.3% during the fourth quarter, or much better than the 10.7% expected. But still, as we take a look at the stock, down about half a percentage point in afternoon trading. Adam?